What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this afternoon. So what we're going to be covering in this video are two extremely important topics. The first is going to be this mother of all gamma squeezes that we are expecting out of AMC to happen over the next trading day, which is going to be Friday, and on Monday and Tuesday of next week. Now, we're going to explain exactly how likely this type of price movement is going to be, and we're going to compare that and basically determine how many of these contracts on the option chain have already been hedged for by a lot of these institutions, and that is going to tell us a very big picture on how large of a price increase or maybe even decrease that we could see going into the next couple of trading days. So in addition to this, we also have the New York Stock Exchange, the NYSE, essentially putting new proposed rules in place that is basically incentivizing all of these market makers and institutions to actually go out and route the orders that retail investors are making actually going onto the exchanges versus executing them in the dark pools or even just holding them on their books, which doesn't account for and doesn't get added into the buying volume on those types of trades. So this is very important information that we all need to be well aware of going into the next couple of weeks. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but the more people that we have learning about AMC with accurate and up-to-date information, the stronger our community becomes. And if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. So at the current time that I'm recording, we are currently trading at $62, a little bit over $62, up about 12.5% on the day. Now, the pre-market action for AMC was actually pretty disappointing. We did see it go negative 10% in the pre-market, but now we have absolutely rocketed up well into the green. Now, let's get into this gamma squeeze situation. So for those of you guys who aren't necessarily completely familiar with what a gamma squeeze is, when these institutions sell these things called call options, the potential max loss is unlimited. The only way that they can hedge their bets is by selling other or buying other call options to offset the risk of the one that they sold, or going out on the open market and buying the appropriate amount of shares to cover the delta risk that these options have. Now, what we're looking at here is these $59 and $60 strikes. If you guys remember, 2 weeks ago, AMC went all the way up into the $70 range. So it is my opinion at the current time that these $40 strikes that we see here already have been hedged for. We've seen the open interest on this specific contract, sorry about that, go from about 225,000 in open interest all the way down to 77,000. Now, this suggests to me that there was a lot of exercising going on this $40 strike. And exercising means that the individuals that hold these specific contracts basically said to their broker, hey, I would like to exercise my right to buy 100 shares of AMC at this $40 price point. And the institutions needed to go out and buy 100 shares of AMC at the current market price and then sell it at this $40 level. Now, it is my opinion now that a lot of these contracts that have a lot of open interest have already been hedged for, but not completely. So these open interests that we see here on this 59 and 60 have significantly increased over the last 2 weeks, meaning that the fact that they are now in the money at the current time, there is still some risk to these institutions where they will have to go out on the open market, like we have said before, and buy those 100 share blocks, which creates more buying volume for AMC, pushing the share price of the stock even higher. So before we get into how the New York Stock Exchange is actually disincentivizing a lot of these different firms who are market makers, and they basically take the orders and route them to exchanges and collect a small fee, we have to figure out exactly what a dark pool is for those of you guys who do not know. So when we come over to this Investopedia definition, a dark pool is a privately organized financial forum or exchange for trading securities. Dark pools allow institutional investors to trade without exposure until after the trade has been executed and reported. The original purpose of a dark pool is as follows. So imagine you are an institution that owns 1 billion shares of Apple, or $1 billion worth of Apple, just to keep it simple, not shares, $1 billion worth of Apple. So thinking about this, if you now find another investment opportunity that you could put $1 billion into that is going to give you a higher yield than you project Apple to give you over your investment horizon, then you may want to take the money that's in that Apple position and reposition it into that new investment. Now, this sale of that $1 billion worth of Apple does not mean that there is something significantly wrong with the company. But if you were to sell that many, that dollar amount of Apple on the open market, when you think of the stock market as a reflection of supply and demand, it floods the market with supply and would decrease the share price. So what dark pools allow for these institutions to do is it essentially provides a place to meet a buyer or a seller and not affect the overall market with these large orders. Now, because of this, there is something called the two-book system, which I have mentioned once previously in my videos, but Kringle Kitten on Twitter provides an unbelievable explanation of what this exactly is. So lately, I've read talks about the second book system. It is real. The first book is held by the company registering transactions between a buyer and a seller. The second book is for validation of such transactions between these two parties through a clearinghouse. Every institution has a second book system in order to peer review transactions and avoid accounting mistakes. The real controversy is the order outflow when market makers taking their time to report their transactions from their second book to the central stock exchange to update pricing on securities. Usually, they have to report these numbers within 2 business days to the stock exchange, part of standard procedure to clear and process out transactions for retail or inline institutional investors. Now, what happens here is that Citadel has done this and already been fined for this in the past. What they do is they don't actually report the dollar amount or the actual trades that are going on in these dark pools to the exchanges. So it is entirely possible, as Kringle Kitten says down below, that these stocks have already taken off in the dark pools. Now, the reason why they would not want to execute these types of orders on the open market is because it would massively influence the actual price of these securities. So what's going on here is that they're making these trades in the dark pools, and it's not being reflected in the actual price of the stock. So it is entirely possible that the share price of AMC at the current time is much higher in the dark pools. But that being said, that $1,500 number that we saw last week is completely fake. That difference is too much to actually happen in these dark pools. Now, coming over here, this article came out yesterday, and there's one portion of this that I really want to touch on for you guys. So the review will also examine whether off-exchange trading, which is dark pools, which is about 50% of the market when institutional block trades are included. So this is showing us that 50% of all orders going on in the market are not even reflected on the actual exchanges. So when we come over to this part on FINRA, for AMC, this is the alternative trading systems data, and we know from that definition right here from dark pools that dark pools are a type of alternative trading system. Now, if these numbers are correct, that 50% of all of the trading volume is occurring in the dark pools, then this share amount is obviously being manipulated and messed with. The total shares that were traded in this dark pool that we are seeing right here, or these are all of the listed dark pools, but the total amount was only 39 million. And we have seen the volume on AMC be much more than this over the past couple of months. Now, coming over here, this is the big piece of news that I want to talk to you guys about. Self-regulatory organizations, New York Stock Exchange American LLC, notice of filing an immediate effectiveness of proposed rule change amending the New York Stock Exchange American equities price list and fee schedule to establish pricing for orders designated as retail orders. So this is the document right here, and what I've done is I've copied and pasted this onto a Google Doc and highlighted the most important things. So the exchange proposes to amend the New York Stock Exchange American equities price list and fee schedule to establish pricing for orders designated as retail orders. The exchange proposes to implement the fee changes effective June 1st, 2021. The proposed change is available on the exchange's website, at the principal office of the exchange, and the commission's public reference room, but this filing actually came out today. So moving on, this is where it starts to get good. The exchange operates in a highly competitive market. The commission has repeatedly expressed its preference for competition over regulatory intervention in determining prices. What this means is that the SEC doesn't necessarily want to come in with regulation. They just want to provide monetary incentives for all of these institutions to follow the rules. So they would make more money by actually engaging in beneficial practices. In Regulation NMS, the commission highlighted the importance of market forces in determining prices and SRO revenues, and also recognized that current regulation of the market system has been remarkably successful in promoting market competition in its broader forms that are most important to investors and listed companies. I don't really agree with that, but let's keep going. So while Regulation NMS has enhanced competition, it has also fostered a fragmented market structure where trading in a single stock can occur across multiple trading centers. This means on exchanges and dark pools. When multiple trading centers compete for order flow in the same stock, the commission has recognized that such competition can lead to the fragmentation of order flow in that stock, meaning that some of these orders are being routed to the dark pools, some to the exchanges, and we're not getting an accurate representation of the actual buying and selling volume on a day-to-day basis. So they are essentially admitting that a lot of these orders are just going to the dark pools, or the market makers aren't even sending them to the exchanges at all. Now, here is what the commission wants to do about this. The exchange thus needs to compete in the first instance with non-exchange venues for retail order flow, and with the 15 other exchange venues for the portion of retail order flow that is not directed off exchange. So what they are saying here is, hey, we need to provide some incentives for all of these market makers to actually send the orders that are supposed to go on the open market actually to these types of exchanges. So in response to this competitive environment, the exchange proposes to amend its price list. So here is where the monetary value comes in to establish pricing for orders designated as retail orders. Now, they go into detail in exactly the process of this, but I would just think that the actual amount of the actual changes is incredibly important. So a credit of 0.0030 per displayed share for orders designated as retail orders that add liquidity. This credit is higher than the exchange's standard credit that ranges between 0.0024 per share and 0.0027 per share. So this number has been increased, and this is a credit to these different types of market participants. A fee of 0.0010 per share for MPL orders designated as retail orders that remove liquidity. This fee is lower than the exchange standard fee of either 0.0026 per share or 0.0030 per share. What they have done here is they have decreased these fees by 66%. And this fee down here, the 0.0005, has remained unchanged. So this is incredibly important information. And what they're doing here is they're essentially saying, hey, we know that these orders are being routed to the dark pools and off exchange, but we know that this is not a healthy practice for the market, and we don't want to step in with regulation because we know that they're not going to follow it anyway. So what they're doing is they're creating a price incentive for all of these different market participants to actually route these orders to exchanges. So in that regard, I believe that this is incredibly good news. Now, in this filing as well, they do offer somewhat of a caveat, and what they say is that it's relatively impossible to track which orders the shares are actually going to the exchange versus to the dark pools or off exchange transactions. But these incentives will come into play at the current time. When you think about this logically, the fact that the New York Stock Exchange can't exactly track which orders are supposed to be going to the exchanges or which orders are getting rerouted to these off-exchange marketplaces such as dark pools, it doesn't necessarily matter a whole lot, because what they are trying to do is provide enough monetary incentive for these different market makers to just send the orders that are supposed to go to the exchange anyway directly to the exchange. So this is very good news in my opinion, and is an unbelievable step in the right direction. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And the more people that we have learning about up-to-date and accurate information on AMC, the stronger our community becomes. So that is going to wrap up this video. I hope you guys are having a great day, and I'll see you guys in the next one.